Welcome everyone to a podcast explaining how we might use Excel, specifically the net present value and present value functions in Excel to do some calculations with regard to leases because leases work a little differently. This expands on the explanation of how to do present value that we went over back in earlier weeks when we did fair value. That was back in week 9. So this is specific to leases here in week 14. So very simple example that I'm going to use. The situation here is that we have a lease where the payment in year 1 is $5,000, in year 2 $7,500, year 3 $10,000. So they are not equal. If they are equal, you can use the present value function. All right. But if they are not equal, you have to use what's called net present value, because the present value function actually assumes equal. So for instance, let's just illustrate, let's do the difference. We will take the total, $22,500 is the total of those 3 payments, divide by 3 to get the average, which is, of course, is $7,500. Now, if we were accounting for this as a lease, we would actually have to record $7,500 a year in rent expense. That is the requirement under U.S. GAAP, is that you treat each lease as, each operating lease in this case, as a straight line situation. So you would record lease expense for $7,500, you would credit cash for $5,000, and the difference would be either prepaid lease or unearned lease or a lease liability to make it balance. So you would record $7,500 of expense. That's the first thing you would need to rely on. Now, second thing is we would have to record the asset and liability for this lease. To do that, you cannot use the average payment. So you use the average payment to calculate lease expense, but not to calculate the asset and liability. The asset and liability are the present value of the lease payments, which means if they were the same payment, you could use present value, but because they are not, you use net present value. So we're going to use the NPV calculation. Now, the first argument you're going to put in there is the rate. That's the explicit rate, the lease, or that will be given to you. You're not going to have to calculate that or anything, but that is the interest rate on the lease. So we're going to just use 0.08 per year because we have annual payments. Put a comma, and then we're going to highlight the payments. Now, here's the problem. Lease payments are almost always done at the beginning of the year. You make the lease payment at the beginning of the lease term, and then next 1 year later, and then 1 year later. So even though this is a 3-year lease, this will actually be payment will be made at the beginning of year 1, beginning of year 2, and at the beginning of year 3. Well, the net present value formula assumes end of year payments. So what we need to do is highlight these two, because this is the beginning of year 2 or the end of year 1. This is beginning of year 3 or the end of year 2. That's going to be the present value of those two added together. This payment, because it's at the very beginning, right now, that's just going to be added in. So our total is going to be $20,517, the amount of the net present value for the remaining payments plus the beginning payment. Now, if it was unusual as a lease and they actually happened at the end of the year, then you could have gone ahead and highlighted the whole thing. But in this case, we're going to assume at the beginning of the year, so we had to take the remaining years plus the 5,000. So on your balance sheet, you would have 20,517 as a right-to-use asset, and you would have a lease liability for the same amount. Record this lease at the beginning of the period. Now, after 1 year, what is our asset and liability? So you would then, again, net present value, same rate. We're now, this is behind us, right? The 5,000, okay? So this is what we're going to make right now. So this is the only remaining payment, okay? And now the 7,500 is the current up-to-date payment. So we just take that plus the 7,500, and our new asset and liability should be 16,759. So this is at the beginning of the lease. This is after 1 year. Okay? So the difference $37.58.57, that would be our credit to the right-to-use asset and a debit to the liability. So you recalculate your net present value. You now know how to do the formula, okay? And then you record that difference as a journal entry. Meanwhile, the payment journal entries are completely separate. Notice that on this operating lease, there is no interest, no depreciation, simply a recording of the lease expense at a straight line, using the straight line, same amount every year, and a change to the asset liability each year based on the new present value of the remaining payments. So at the end of year 2, this will be the current payment, and so our asset and liability will need to be 10,000. So you'll adjust it by the 759 to get it down to 10,000. All right, and then at the end of year 3, the $10,000 asset and liability will go away. So the asset and liability exist for the 3 years that the lease is in force. All right, so that's how you use Excel. That's how you use a net present value formula in Excel, and how you apply that to a operating lease in this case.